Good afternoon, and a really warm welcome to all of you joining us for our latest Green Shoots webinar. My name is Joe Crehan. I'm the Glasgow-based investment director and the renewables specialist at Greenbank, and I'll be running today's event. For those that are new to Greenbank, we are the specialist ethical and sustainable investment business within Rathbones. We've been managing bespoke portfolios for private clients, charities and trusts for over 20 years, aiming to combine their unique sustainability and financial requirements. We have a long track record of using our investor voice to create positive environmental or social change on a diverse range of issues, from climate change to modern slavery and health and nutrition, both through engaging directly with the companies that we invest in, but also by engaging with a wide range of NGOs, policymakers and standard setters with the ambition of enabling a wider systems change. The Greenbank team is spread across Bristol, London, Liverpool, Edinburgh, and most importantly, from my perspective, Glasgow. Please do reach out to us via the contact details on our website if you'd like to learn more about our services. So, today's event. Today, we're looking at what a changing global political climate means for renewables and the energy transition. We're really pleased to be joined by David Bird, Investment Director at Octopus Energy Generation and Octopus Renewables Infrastructure Trust. Octopus Energy Generation are one of Europe's largest investors in renewables, and interestingly for this discussion, now have assets in the US. David and I will discuss the direction of travel for the renewable energy industry, covering political developments in the US and their implications for continued renewable deployment and the energy transition. For the final 15 minutes of the session, we'll move to a Q&A before we close at 12:45. If you'd like to submit a question for our panel discussion at the end, please do so via the engagement panel on the right of your screen. You're very welcome to post your questions anonymously if you prefer. I guess as a former teacher, I can say this, there is no such thing as a silly question. We've already received some great questions from you all as you registered. So in terms of today's discussion, there'll be no PowerPoint slides used in this discussion, just good old-fashioned words, and of course, the highest quality speakers. The imagery will be provided by Greenbank Publications, which are available for you to download from the engagement panel on the right side of the screen, including our most recent engagement review and Investor Day reviews, where we covered themes ranging from water scarcity to unlocking a net zero future. Throughout the session, if you're on social media, please use the hashtags #Greenbank Investments and #GreenShoots. If you do happen to lose connection, then please try and rejoin through the event link. And if you're having any issues using the conference portal, then click the headphone mic icon in the top right corner, which is also available on the engagement panel under technical support. We would also be grateful if you could fill in the feedback form at the end of the webinar, which will take no more than 2 to 3 minutes. Your thoughts on how we can enhance and adapt these webinars are always appreciated. So let's get started. So I will give a couple of minutes intro just to provide some context and set the scene before introducing David. So deployment of clean energy has been running at a rapid and accelerating pace, regularly breaking records along the way. Almost 560 gigawatts of new renewable capacity was added in 2023. That was up 64% year over year and a new record. That marked the 22nd year in a row that renewable capacity additions set a new record. Also in 2023, for the first time, over 30% of the world's electricity came from renewables. This has been driven by falling costs and supportive policy. On the cost side, according to the IEA, the International Energy Agency, in 2023, an estimated 96% of new utility-scale solar and onshore wind had lower generation costs than new coal and natural gas plants. Then on the policy side, in 2022, the Inflation Reduction Act was passed into law in the US, which included incentives for US domestic production and manufacturing of clean energy technologies. Following this increased momentum and deployment in clean technologies, last year, the International Energy Agency predicted a peak in the use of all 3 fossil fuels by 2030. However, fast forward to today, and you may have seen that clean energy indexes of stock market indices haven't been performing very well. You may also have read a number of articles talking about how challenged the renewable energy industry is and forecasting a longer dependence on oil and gas. This has been catalyzed by the re-election of Donald Trump, whose preference for fossil fuels has been communicated by phrases such as drill baby drill, and by his description of the Inflation Reduction Act as the Green New Scam. And that's before we've got to his favourite topic of tariffs. Yesterday, I saw the eye-catching headline of tariffs of up to 3,521% on Southeast Asian solar panels. I'm yet to see how that very precise sounding number was calculated. But that's enough from me, and certainly about President Trump for the moment. So, where are we going from here? Thankfully, we have David here to help us make some sense of this. So, welcome and thank you for joining us, David.
David, thanks, Andy.
Why don't you kick things off with an introduction to Octopus Energy Generation and your role within the organisation with Octopus Renewables Infrastructure Trust?
Sure, yeah, very happy to do that. And thanks again, Joe. And good afternoon, everyone. So Octopus Energy Generation has been running now for about 15 years as a specialist fund manager focused entirely on renewable energy and related sort of energy transition investment. So we started off very much focused on solar in the UK, but have really expanded since then and are invested in range of technologies, wind and solar in particular, but also an increasing amount of investment into some of the sort of other newer areas of the energy transition and things that are going to drive that move towards net zero. We've got just under £7 billion worth of infrastructure assets and developers that we're managing on behalf of a wide range of different investors, both retail and institutional, across a number of different funds. So most of my time at the moment is spent as one of the co-managers of our listed investment trust, which we call ORIT, short for Octopus Renewables Infrastructure Trust PLC. But we do also have, as well as sort of private funds targeting big pension and insurance type capital, we're also constantly looking to raise new products. So two that we expect to come through this year, for example, is a new product focused more on sort of climate ventures and solving some of the bits of the energy transition that are yet to be solved, and also a new a new semi-liquid product, which will be a fund of funds, allowing private wealth potentially to access some of the bigger private funds that we have investing in offshore wind, solar, and other technologies globally, not just in Europe, which is where ORIT's focus is. And we've got a team of around 150 or so people and assets now, not just in the UK, but in Europe, Asia, Australia, and more recently in the US as well.
Fantastic. Thank you very much for the intro. So we've heard a bit about your background. So you are very much seeing this very closely. So let's talk about what I touched on in the intro. So I touched on some of the kind of historic growth, but how's deployment of renewables going more recently?
Yeah, so that sort of story of records has really continued. So although perhaps some of the rhetoric and the headlines have shifted, what we saw in 2024 was not just more of the same, but even more on top. So the new electricity generation capacity that was added in 2024, more than 90% of that was renewable capacity. I think you said sort of 30% of electricity generation globally was renewables in 2023. That number went over 40% in 2024. If we sort of focus a little closer to home, I think it was the first time ever last year that we saw more output in the EU from solar than we did from coal, and gas output's been dropping now 5 years in a row. So renewables are becoming an ever bigger part of the picture, and we remain convinced that trajectory will continue, and we'll see more and more of it. We're not using coal at all in the UK anymore in our power system, and more than half of our power comes from renewable sources.
Thank you. So yes, so continued momentum, certainly. So we've talked of lots of this kind of positive momentum and these records being broken year after year. So let's move then to the kind of the main topic of today's discussion, which is possibly one of the sources of some of those articles that are sowing a bit more doubt about that direction of travel. And that's very much looking at what's happened in the US and the political developments there, being with President Trump's approach towards energy being less favourable, let's say, towards the renewable energy industry. So Octopus Energy Generation moved into the US market in 2024, so fairly recently. So I feel like you'd be very well positioned to comment on this. So what does a second term for Trump mean for the US renewables market? I guess is the kind of first part of this question, and then the second part is, have your plans changed in response to that?
Yeah, so it's clearly does the sort of the Trump administration's policy on renewables is clearly not what we as a sort of quite purpose-driven renewables-led manager would like to see, but nor is it a surprise or something that we couldn't see as a possibility when we entered the US market, having spent quite a bit of time looking at it before last year. So we've invested in some operational solar in Pennsylvania and Ohio, but we've got a team on the ground in New York, and they've been there for some time, and they're continuing to support the growth of that team and continuing to look for new opportunities. So as we looked at the political landscape last year, obviously a lot of uncertainty around the outcome of the election, but certainly Trump's views were clear. I think what we've seen since, I wouldn't say it's without any surprises, but it's consistent with what had been announced before in terms of things that were going to happen very quickly, and then some other things that remain uncertain. So we continue to see a huge opportunity to invest in renewables in the US as well as globally. But I think what is different compared with if we were sat here now with a sort of Democratic president or a president from the Democrats. Clearly we're not going to be doing exactly the same as we might have done in a non-Trump administration. There are certain areas that are easier to make progress, and definitely a need to be a bit more selective, and a certain amount of wait and see. So one of the things that this sort of political aspect brings is uncertainty, and one of the challenges in making these big infrastructure investments in a time of uncertainty is it just slows things down a little bit whilst getting to the bottom of what is and isn't going to change.
Yeah, no, completely understood. And if we kind of go into the details of it in a bit more depth, so we had his kind of executive orders, President Trump's executive orders when he first came into office, a number of which were kind of pro fossil fuels, and some others which kind of tried to make things a bit more challenging for aspects of renewable energy. So looking at those, and then thinking about the kind of the comments I talked about at the start about the Green New Scam and his approach to the Inflation Reduction Act. So really the kind of the policy changes that already have happened and that have been mooted as happening soon. What kind of impact do you expect those to have? And on that Inflation Reduction Act, how important really is that act for the growth of clean energy in the US?
Yeah, so some things were very clearly expected. So, for example, what some of the early executive orders around no new licensing for offshore wind, and that's something that had been very clear on his dislike for offshore wind, particularly if it's near one of his golf courses. So we weren't surprised there. And actually, although we do have investments in offshore wind developers, and some of those developers had been in the US market historically, already there'd been a certain amount of pullback from the US, not really for political or sort of headline political reasons, more just because some of the quite sort of state by state regulatory processes of how seabed's awarded and various things like that were quite challenging anyway, and we were seeing better opportunities elsewhere. So clearly there's been big headlines and impacts on the likes of Ørsted and Equinor from some of the changes on the offshore side of things. And I think what's been more surprising recently is he's gone further than that. And there's effectively at the moment a pause on one of the most advanced ready to build projects off New York, Empire, where that project was ready to build, had contracts let to suppliers with a lot of US jobs and US supply chain involvement, because that's been part of the requirements, and suddenly that project's got a big question mark on it and is effectively in standstill at the moment. So while certain things were expected, there have been other things that have gone further and still are uncertain. There's almost certainly going to be some legal challenge, much like we've seen with tariffs. There'll be a headline and then maybe there'll be a certain adjustment and a presentation around a sort of negotiation opportunity. So whether the sort of impact on US companies and US jobs of pausing a project where those companies and people were going to make a lot of money, maybe that will change the outcome there, maybe it won't. And I think that same uncertainty and what is and isn't expected applies to the Inflation Reduction Act. So the ability to develop renewables projects in the US didn't start with the Inflation Reduction Act. There's been tax credits as the key incentive mechanism for building renewables projects for longer than I've been working in the industry, which is over 15 years now. And the precise nature of those credits have changed over time. Way back in the Obama administration, you could get grants in sort of as a prepayment of those tax credits. One of the things that the Inflation Reduction Act was added a load of extra grants for certain sectors, which really was helping to accelerate things. Those have already been frozen. So any sort of cash handouts that came with the Inflation Reduction Act have been stopped. But you don't need the Inflation Reduction Act necessarily to get projects built. What you did need was the Inflation Reduction Act to get as much infrastructure built as quickly as we need to meet decarbonisation targets, but clearly that's no longer a political priority in the US. So it'll affect certain sectors more than others. One thing that I think there's been a lot of lead into as well is some of the sort of anti-electric vehicle rhetoric. So some of the things around the IRA and other sort of legislation was supporting rollout of charging infrastructure, supporting things that was going to accelerate transition to cleaner electricity-driven vehicles. That's one of the things that's quite likely to fall away. Other areas like battery storage, green hydrogen had their own tax credits, but things like wind and solar that have had tax credits for many, many years, I think it's far less clear what will happen there. And at the moment, that's all up in the air because all of this sort of ability to affect the Inflation Reduction Act, because it's heavily driven by tax credits, it interacts with the budget process, which is still going through the Congress system there. It's fiendishly complicated, and it sort of changes month by month. So I wouldn't be surprised at all if we saw headlines and a draft bill going through one of the houses saying the Inflation Reduction Act is going to be completely repealed. But we've already seen letters from multiple Republican congressmen and women supporting certain constituents of theirs. And it's important to remember that if you look at where the Inflation Reduction Act was actually going to benefit jobs and to have projects receiving credits that was going to stimulate investment, it was actually heavily weighted in Republican areas. So there will be a lot of Republican representatives, senators who don't want to see that sort of economic stimulus into their constituencies falling away, and will have their own sort of pet projects that they're wanting to push. So I think even if we see a headline saying complete repeal of the Inflation Reduction Act, then stuff will start to get sort of added back in as the horse trading goes through the houses. Because remember, the margins are quite small. There's only sort of a couple of votes in it to get these things passed. But clearly it's uncertain. And with things as sort of going back to the sort of surprise on Empire Wind, it could be worse than perhaps the sort of more optimistic commentators expect. We'd still be very surprised if existing projects with existing tax credits had any sort of removal there. Again, nothing's impossible, but that would be hugely challenging from a legal point of view. So there's a sort of a lower risk end of the spectrum, both in technology and stage of project. But would we be running hard at sort of green hydrogen development in the US on the basis that we needed a tax credit to get it to work right now? No, we wouldn't.
Yeah. No, that's interesting, and I guess putting together the kind of key points of that very detailed answer, the uncertainty there of not knowing what's going to happen, but also that it is the Inflation Reduction Act was brought in to accelerate that growth in the renewables. It wasn't, as you say, it didn't create it. That growth is going on regardless. And then on the what happens to the actual act itself, you mentioned the kind of letters. There's been a renewed effort. So more recently, 21 House Republicans signed a letter to the House Ways and Means Committee opposing a full repeal of the legislation. So that it's ongoing, as you note, and it does require a majority in both houses to pass. So.
Yep.
So uncertainty, very much the name of the game on that side, but interesting to hear some of the dynamics at play there. So that is looking at the kind of the US policy side of things. We would be remiss if we didn't, unfortunately, talk about tariffs, which it was a question that's been put, which I feel should be addressed now rather than in the Q&A at the end. So. How will the imposition of trade tariffs impact the renewable energy industry? And again, are you doing anything in response to that?
It's another area where there's a lot of uncertainty, and another one again where it's important not to sort of fall into the trap of thinking this is new or completely new. So the US already had a hugely complex set of tariffs on solar panel and panel parts, for example, some of which had been sort of anti-dumping type measures on China directly, but then also around certain particular countries, particularly in Southeast Asia, to try and avoid sort of circumvention of something targeted at China by, if you look at where the US imported panels from in 2023, it was Vietnam, or sort of components for panels. It was Vietnam, Cambodia, Thailand, and I think one other country in Southeast Asia. So it's already the case that there were tariffs potentially of hundreds of % in place. Clearly, the more recently announced tariffs with sort of eye-wateringly large numbers on anything coming from Vietnam, for example, it would then be layered on top with potentially more, again, sort of anti-clean energy stuff and getting to those wild numbers. So it clearly is challenging. And when we look at the US context in particular, actually the US is one of the few countries sort of outside Asia where there is quite a well-established domestic manufacturing capacity. It's not enough to meet the sort of level of demand which we were expecting for solar projects, but it clearly creates a quite significant likelihood that the cost of getting new projects built increases, and also it's one we're looking at from the point of view of spares and maintenance for existing projects in the US. But it also has an impact more widely, and when we look at where at the moment the bulk of our portfolio remains in Europe, actually there's very little in it, if anything, in our supply chain that goes sort of in and out of the US. So there's no sort of direct impact there. There's even been some speculation that there may be sort of overcapacity of certain components that were looking to the US as a market and now will be sort of priced out. And maybe there's opportunity for some of our European developers and construction projects to be able to get certain equipment at a lower price than they otherwise might. But again, that's very unpredictable because we don't know where we end up in trade wars, whether there's sort of either retaliatory tariffs on certain things, whether certain regimes might almost try to sort of cozy up to the US by sort of copying some of their tariffs in order to get a better deal with the US. So it's another one where uncertainty is the short answer, but but not to the extent that we're finding for investments outside the US that it's significantly changing what we're doing. So we're still running very hard at new projects. But no, it's again brought another layer of increased focus onto how we're managing our supply chain, which is something we've had to do several times over the last 5 years. COVID hit, we had to spend a lot of time looking at supply chains. What did that mean? 2022, massive inflation on the back of the spike in power prices after Russia invaded Ukraine. Again, a lot of time looking at supply chain, where and whether we should be stockpiling certain parts to sort of protect against further cost rises, which is something we have done in the past. So it's that kind of thinking that goes into the sort of day-to-day management of the existing projects.
Yeah. Okay, so it sounds like you have your work cut out.
It's never quiet.
No, certainly not over the last few years in particular. So when you touched on the impact there on kind of European markets on the tariff side. So what about the kind of the US policy angle as well? You know, with the US kind of pivoting away from renewables from a policy perspective. What implications are there for UK and European markets, and possibly, you know, the energy transition more broadly?
Yeah, so it's one that we'd, I suppose, started to see a little bit of an impact just on particularly some of the big US financial institutions, even before Trump had got in, had started to sort of pull back a little bit from some of their sort of ESG driven investing, and it almost ESG seemed to become a dirty word for certain large US financial institutions, even before some of the more recent policy announcements. Actually, where we sort of spend most of our time, those kind of institutions hadn't been a big part of either the capital we were chasing to sort of raise funds, or the capital we were competing with to deploy into projects. But certainly that is one of the big challenges with the energy transition, is just how much capital is needed. Trillions of dollars to deliver a sort of decarbonized and sort of energy secure, affordable system for society, and we're not yet doing enough quickly enough. So any capital that's kind of taken out of the equation is really not what we should be hoping for, and clearly the likelihood of large US financial institutions to be really prioritizing green spend, whether in the US or elsewhere, is lower than it might have been a few years ago. But but it doesn't change, I suppose, that's kind of from a really big picture society point of view, in terms of the investment opportunity and the ability to put, you know, non-US money to work in Europe and wider. You know, that hasn't slowed down at all. You know, we don't expect that trajectory of sort of record on record going from year to year to stop in 2025 or beyond. I think the question, what's, you know, more of a problem perhaps, is that we needed to keep seeing that acceleration, and the sort of I think there was a sort of tripling in investment needed by 2030, or in the annual rate of investment, and that's much harder to see sort of where we're sat right now.
Yeah. No, understood. And so you talked there to some of the motivations behind that money kind of being invested in renewables. So just kind of going into that in a bit more detail. So we've talked on the policy side of influencing new build renewables. So policy is clearly a factor and a catalyst. But what is the kind of most important driver behind the build out of new renewable infrastructure assets? You know, when developers are looking to build, what are their primary motivations?
I think it's quite different on the sort of kind of developer. Actually, we've seen, if you look at where we're investing in developers, they tend to be relatively smaller, independent developers, and we've got capital that is looking to get that slightly higher return from investing in development than you can get from just backing an operational project. Ultimately, most of those developers are doing it because they can see the opportunity to earn an attractive level of return. Where the capital has come from is a real split as to how much is sort of impact driven and not. I think, again, even before Trump, I remember being out sort of raising money in 2021, and every single meeting had a really strong ESG and impact focus, and the sort of the additionality that comes with funding new development was a really sort of hot topic. I think the first thing that happened that started to sort of dial that back a little bit probably actually was less about politics and more around cost. We saw a lot of inflation going through 2022 and 2023, and a real focus on how am I getting returns that are going to sort of deal with a higher rate environment and that side of things. But that hasn't stopped us being able to find developers and sort of make attractive investments. I think what it did do a little bit is perhaps some of the other players in the sector found it was maybe a bit harder than they thought, and also made an awful lot of profits on their fossil fuel activities, and maybe saw those becoming more profitable when they'd become challenging historically. And so we saw some of those players sort of leaving the space a bit more.
Yeah, and there have been a couple of high-profile cases of major UK and other energy companies pivoting away from renewables and towards their fossil fuel assets. So that's interesting to hear that perspective. So, I mean that one final question before we move to a bit of a Q&A on some of those motivations. So I just wondered how much the falling costs that I mentioned at the start factors into the kind of continued penetration of renewables. And another thing we haven't mentioned yet is the kind of the rapid growth in electricity demand that we've seen in recent years. How much do they support that continued kind of rapid build out that we were talking about?
Yeah, they're hugely important factors. I think when we look at the journey we're on, for us as an investment manager, we are quite sort of purpose led, but we are not a manager that is seeing there being any sort of compromise between financial returns in delivering that positive impact. But the thing that we think, the reason we're convinced that renewables are the future and are a huge opportunity is because it's not just the decarbonisation that they deliver. They are the cheapest form of new electricity generation, and they are also increasingly the answer to concerns around energy security. And we saw that trend really sort of coming to the forefront of minds with Russia's invasion of Ukraine, but even with some of the political uncertainty more recently. There was a piece in the sort of the Ember think tank recently in the last few days around just emphasizing that point that renewable generation is inherently domestic. The supply chains for it may not be, and then that's something that needs a bit of looking at. But once you've got the equipment installed, the resource is domestic. You are not reliant on importing fuel from somebody. So renewables solves political problems as well as social problems, and it's the cheapest. And obviously cost of living is also a political problem. So that's why we're convinced that that it remains the future. And on the demand side of things, again, lots of debate around just how much new demand might come from things like AI and all the new sort of quite resource intensive data centers that are going to sort of come along with this mass adoption of AI. That is undoubtedly going to be a factor and something that even a couple of years ago wasn't really in the projections. But even before then, we were already seeing a massive expansion in electricity demand coming, because the way we see it is anything that's currently burning something as a source of energy, if you can electrify it, you should, because it will be the cheapest way of doing so, whether that's heat pumps in people's houses, electric vehicles on their driveways, or even in sort of heavier industry. And that we view that trend as unstoppable, because whatever your sort of political view around around the green aspect of it, eventually if it's cheaper and more secure, it's going to win out.
No, that energy security point is a really interesting and sometimes underappreciated one. I think the European Commission referred to it as freedom energy for that reason. You don't need to have won the kind of geographic lottery of which resources you have or commodity resources you have. Everyone has access to renewables. So let's move on then to the Q&As. We've actually I've asked a couple of questions provided in advance already because they genuinely are really good questions. So let's move on to some more. So first one, focusing on a particular technology now. So are wind turbines falling out of favour?
Well, we knew that President Trump didn't like them, that's for sure. And from our point of view, no, they are a huge part of the future. They have always been, perhaps more so than solar, something that has got no bigger challenges and more sort of care needed around things like visual impact, but also sort of noise and shadow. So you can have solar panels on someone's roof, you can have solar panels in a field quite near to where people are living. For big wind turbines in particular, you just need to have more space around them to make sure that they're not having a negative impact on people's day-to-day lives. One of the reasons actually why sort of offshore wind potentially sort of gains more favour, and even floating offshore wind where you can go further offshore. Again, for people who are worried about visual impact, I actually quite like looking out off the beach and seeing them, but no, not everyone does. They're just a little bit further away if you can go into deeper waters. But there is still, plenty of space where turbines can sensibly be built in a way that is sort of considerate of communities living around them. And actually, one of the things that we've seen within Octopus, I suppose two things. One is some survey results that I think may have been around the time of the last general election here that actually showed that wind turbines are more popular than pizza, which I was surprised by.
Not heard that one.
But the second thing is actually that we as sort of people who are trying to drive the energy transition do need to, we can't stick our head in the sands about these things. So one of the things that Octopus has developed is a tariff where if you are an Octopus Energy customer and you sort of live within a certain radius of a couple of different turbines that we're running this on, effectively, if you can see that turbine because you live close enough to be able to see it, and you can see it spinning fast because it's windy, you will be paying sort of half of what you otherwise would have done in those periods, because we'll give you some of the benefit of there being that sort of healthy supply of energy coming into the network near where people are located. So that's something that Octopus has been doing in the UK. And then, when we sort of opened up, who would like to have one of these turbines in their backyard to be able to benefit, had a huge uptake. So there's real actual popularity, and if you engage with communities, I think people are very accepting of these things, and we've had success with that now in France and Germany as well.
Yeah, no, interesting. And just moving on then to another technology, and another question submitted, which is and one I know you have some experience with. What are the opportunities and developments in energy storage just now?
Yes, and energy storage is really interesting. Actually, it's something that whilst we have done some of within Octopus, we haven't done anywhere near as much as we have done the sort of core generation technologies of wind and solar. It's a sector that we've been following very closely now for 10 plus years. When people talk about storage, particularly in recent years, there's quite a lot of focus on battery storage. And I think one of the things that has been incredible over that sort of last decade is just how quickly technology has moved on in terms of and cost. With a sort of bit of a blip in 22, 23 again, we've seen battery costs tumbling, and we've seen the amount of time. So when you look at a battery storage investment, you don't just look at how much power can the battery put back into the grid, but you look at for how long can you do that. So its capacity in terms of duration, we tend to talk about a 2-hour battery or a 4-hour battery because it can export at maximum capacity for that long. And when even a couple of years ago, there was a lot of debate around whether people should be building 1-hour or 2-hour batteries, and did the extra cost of 2 hours make sense? There's now an argument going on around whether 8 hours or 20 hours is the right cutoff to let these batteries sort of compete in certain sort of government support schemes for long duration energy storage. So that ability of batteries to cover quite long periods where sun or wind output dips is moving forward. It's still quite hard right now to see batteries solving for a fortnight in February where we have very low winds, and at the moment that's where we're most dependent on gas, particularly for heating. So there does need to be further technological development. Now, things like pumped hydro already work, but they tend again to be covering periods of hours rather than weeks. But again, there's interesting technological developments there, and it's also one of the places where green hydrogen could play a role in the system, because if you produce green hydrogen, you can store it for weeks on end. So yeah, there's a lot of exciting things going on in storage. It's just ultimately when we've got our investment hats on, it comes down to do we think the returns justify the risk? And one thing that there has been less of in energy storage in recent times is sort of secure fixed revenues. And so the reason we haven't done much in storage isn't because we don't like the asset class or we don't think it's got a huge part to play in the system of the future. It's just we've seen others being willing to pay more than we were on a risk adjusted basis.
Yeah. Okay. Yeah. No, that's a space that is been moving at quite a pace. So just looking at some of the other questions, there's a couple that are focused on wanting to hear a bit more about the UK and the rest of the world, having obviously discussed the US side of things. So kind of more about how's the how renewables doing in the UK, and what are the kind of wider trends outside the US within renewables?
Yeah, so I suppose in the UK, the sort of political swing on sort of pro or anti renewables has been more favourable over sort of the last election cycle. So with the current government, we've seen for example, certain large solar projects that were having a very slow journey through their approvals get approved very quickly. We've seen an effective ban on onshore wind in England having been removed, and we've seen just again an increase in the sort of the momentum and the tone, and hopefully helping accelerate things. More capacity that can be procured with CFD auctions, things like that. So that's all very helpful in the UK. I think at the moment, the biggest challenge to investing in new projects in the UK had become grid connections.
Yeah.
But we're just coming through a process of reforming how the queue works and effectively clearing a lot of dead wood out of the queue.
Yeah.
So hopefully that, which I think Ofgem have reached a decision on recently, but needs to go through a few weeks more before we've got sort of crystal clarity on it and exactly how everything works. But we've got developers lined up, hoping that projects that might have been told you can't connect to the grid until 2030 something, now we should be able to pull those dates a bit earlier and just get on with building these projects that we so essentially need. In Europe, again, the political momentum has broadly been positive. We saw some sort of far right parties that are clearly anti-renewables, that they are still out there in Europe, but we haven't seen any of them sort of get to a position of power. And probably the grid issue has been less in certain European markets, just because of a different sort of regulatory regime and how stuff gets built. So there's lots of opportunity out there, but no, it's an ever-changing landscape, and one that we think is right now more positive in Europe than the US.
Yeah. Okay, and mindful of time, there's a huge range of questions coming in, but we won't unfortunately have time for them. But they are fantastic, so thank you everyone for sending them in. Just can you kind of summarize what are you? It's nice to end these on a before I wrap up on a kind of positive note. So what are you most optimistic about when you look at the kind of the global renewable energy market?
I think it comes back to that. Well, I call it the inevitability, actually, and it doesn't always feel like it when you're looking at the headlines, but the fact that the costs are continuing to decline, the fact that people have sort of woken up to the energy security aspect of it, gives us as good a chance as we've ever had to deliver what we need to do, also from the decarbonisation point of view, quicker than we might have hoped, even just a couple of years ago. So that sort of increasing awareness of the inevitability, and that we need this, but also that we want it for the price and for the security, that I think gives us a lot of power to go and get stuff done.
Yeah. No, thank you very much. So I better wrap up now. Mindful of the time, thank you very much, David. For coming in today. It's been a really interesting discussion, and to all of you for listening and taking the time to join us. The recording of today's webinar will be available to view on demand and will be posted on our website over the next few days. Do please share it with anyone who might be interested in the topic. Please also take the time to explore our other areas of focus at greenbankinvestments.com. These range from biodiversity to food policy, health and nutrition, and animal welfare, and much more besides. And don't hesitate to get in touch via our website. We'd be delighted to talk further. We'd be grateful, as mentioned at the start, if you could take a couple of minutes to fill out the feedback form. The link is on the engagement panel. So I hope that was really informative and interesting for everyone. That momentum, as David noted, isn't going away despite political developments. So lots to look forward to still in the coming years. So most importantly, thank you all once again, and enjoy the rest of your afternoon.